Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about the Russian economy and specifically major problems that are now coming to light with regards to currency and the fact that India and China are refusing to do business in Russian rubles. If you've been following the channel, you'll be fully aware that since the sanctions were imposed against Russia, it's increased the volume of trade that it's doing with China and India, and they are now its two main trading partners for its most valuable commodity, oil. So in theory, Russia has managed to sidestep the biggest impact of the sanctions by finding new buyers for its products. But the biggest problem that Russia has is that whilst it's a net exporter, the things that it's exporting are commodities, things like oil, gas, coal and wheat. However, Russia is still dependent on imports, so it needs to do lots of trade with lots of countries around the world. And to do that, it needs a currency that those countries are happy to deal in. And unfortunately, from Russia's point of view, nobody wants to deal in Russian rubles. Now, we've spent a lot of time on this channel talking about the devaluation of the ruble. Over the last 12 months, it has fallen significantly against the US dollar. There's been a bounce back over the last month or so since Russia imposed additional capital controls to make sure that its exporters couldn't actually trade in anything other than rubles. However, even taking into account that bounce back, the ruble is still down significantly year on year. But in today's video, we're going to look at some data that shows that the value of the ruble is actually becoming almost irrelevant because Russia is being left with huge quantities of Indian rupees and Chinese yuan as a result of its trade with India and China. And as those currencies are not widely accepted by other countries around the world, it's now struggling to be able to do anything with it. So it's making the sales to India and China, but actually it's not converting those sales into usable cash because of the currency problem. So in today's video, we'll go into the details of the currency problems that Russia is experiencing. We'll look at the increase in the volume of trade with India and China. We'll have a look at what's been going on with the exchange rate between the Chinese yuan, the Indian rupee and the Russian ruble. And heads up, spoiler alert, I can tell you that the ruble has devalued against both of those currencies. We'll then talk about the oil price cap and the actions that the USA are now taking against tanker companies who are transporting Russian oil. And then finally today, I'll wrap up with my summary. So what I think the implications of the fact that Russia is now being paid in rupees and yuan for its oil exports will be on the Russian economy. But before we get started on all of that, I'd like to say once again, thank you so much to everybody that supported the channel. Really appreciate it. If you've bought me a coffee or sent me a YouTube super thanks or become a member on YouTube or one of my patrons, thank you so much. I really, really appreciate your support. And if you're thinking of supporting the channel but you don't want to use any of those things, then maybe you'd like to win this little guy. And if you would, then have a look at the video at the end of today's video. One of Russia's most lucrative oil trade routes since the imposition of the Western sanctions over the Ukraine conflict faces a major challenge because of the drawbacks of payments in currency other than dollars. For decades, the US dollar has been the currency of international oil trade, and efforts to find alternatives have been thwarted by the difficulties of conversion as well as political obstacles. The problems for Russia flared when India, which has become Russia's biggest buyer of seaborne oil since European customers retreated, insisted in July on paying in rupees, and the trading activity nearly fell apart. It's been reported that Russian oil suppliers could not do deals in Indian rupees because of informal guidance from the Russian central bank that it would not accept the currency, with the bank reported as saying that receiving currency in a non-convertible currency, such as rupees, had little value outside of India and was pointless as Russia has limited opportunities to spend rupees as its imports from India are insignificant. It was also reported that in mid-August, at least two major Russian oil companies threatened to divert around a dozen tankers carrying up to 1 million tons of oil that were heading to India to other destinations. As a temporary solution to the clash involving Indian deals, the cargoes were paid for in a combination of the Chinese yuan, the Hong Kong dollar as a transition currency into the yuan, and the United Arab Emirates dirham, which is pegged to the US dollar. It's also been reported that these problems are not just affecting trade with India, but also trade deals with China, Turkey and countries in Africa. The biggest issue, however, concerns India, which has been buying more than 60% of Russian seaborne oil and is the biggest purchaser after China. And it's likely that these problems will worsen as scrutiny on Russian trade increases, and the USA recently imposed sanctions for the first time on owners of tankers carrying Russian oil priced above the Western cap. Since the sanctions were imposed on Russia in February 2022, Moscow has shifted from transactions in dollars and euros, the world's dominant currencies, and is largely locked out of the international banking system. It's reported that less than 10% out of Russia's output of around 9 million barrels of oil per day is now sold in dollars or euros. The Russian central bank cannot operate in dollars because of the sanctions, and while Russian exporters theoretically can use the currency, avoiding it has the advantage of making it harder for the USA and other Western governments to monitor their trade. However, the alternatives are now leading to higher levels of risk for Russia. India, in the first few months of 2023, owed around $40 billion to Russia for oil and other supplies, and doing business in rupees is particularly difficult for Russia. India encourages rupees to be spent on its territory and has imposed punitive exchange rates on converting rupees into other currencies, amounting on occasions to over 10% of the amount converted. The situation could ease if Russia imported more goods from India, which could be paid for in rupees. However, India has been importing more from Russia, while Russia has been a major importer of cars, equipment and other goods from China. India's imports from Russia between April and September 23 amounted to more than $30 billion, and the trade deficit with Moscow widened to $28.4 billion, compared with around $17 billion in the same period last year. Russian officials and oil executives have pressed Indian buyers to pay in Chinese yuan, which for Russia is a more useful currency. For India, using the currency of a regional rival is highly sensitive, although Indian private oil refiners have switched back to the yuan due to the lack of other options. Indian state refiners have turned to the UAE dirham, but that has been complicated by additional clearing requirements, as Washington's tougher lines make other governments wary. From October, several UAE banks have tightened control over Russian-focused clients to ensure compliance with the price cap, and at least 2 UAE banks have introduced price cap compliance declarations for their clients involved in Russian crude, oil products and commodity trading. These charts show the major countries that Russia has been trading with since the European Union introduced its outright ban on the purchase of seaborne crude oil on December 5th, 2022. And the reason that I wanted to have a look at these charts was to establish exactly how much business Russia is currently doing with China and India, which are the two countries that are refusing to do trade in Russian rubles and are paying in Chinese yuan and Indian rupees. If we start off by looking at the level of trade that Russia is doing with China and focus in on crude oil, which is the largest of all of Russia's exports, you can see that China is by far the largest buyer of crude oil, and since December of last year has purchased 52% of all of Russia's crude oil exports, which equates to total purchases of around 45 billion euros or $50 billion. The next biggest item that China is purchasing is coal, and as you can see from the chart, China is Russia's biggest purchaser of coal, purchasing over 45% of Russia's exports, which in the 11 months to the end of October 23 accounted for around $10 billion. China's third biggest purchase from Russia is oil products, so these are refined oil products such as gasoline, diesel and kerosene. And as you can see, China isn't actually the biggest purchaser of oil products. That accolade goes to Turkey. But China still purchased around $7 billion worth of oil products in the last 11 months. China is the second biggest purchaser of pipeline gas, ranking behind the European Union, as some countries have a dispensation to continue buying Russian gas due to the fact that they're landlocked and are finding it very difficult to be able to replace those supplies. And in terms of scale, in the 11 months to the end of October, China purchased around $6 billion worth of gas. And when you compare that to the $50 billion worth of oil, you can see that there's been a huge reduction in the income that China is earning from its gas sales. And looking at the alternative use of natural gas, which is converting it into liquefied natural gas and then exporting it via ships, you can see that in the 11 months to the end of October, China was the second largest purchaser of LNG, interestingly after the largest buyer, which was the European Union. And China's total purchases of LNG from Russia in the 11 months equated to around $3 billion. So in total, in the 11 months to the end of October 23, China purchased around $76 billion worth of fossil fuels from Russia. And clearly the problem that this presents to Russia is that all of those payments have been made in Chinese yuan, not Russian rubles. If we now have a look at the trade that's being done between Russia and India, there are only really two main categories here: crude oil and coal. In the 11 months to the end of October, India was the second largest purchaser of crude oil, buying 34% of Russia's total sales, which equated to around $35 billion. India was also Russia's second largest customer for coal, purchasing 18% of Russia's total exports, which equated to around $5 billion. So this means that the total amount of exports from Russia to India in the 11 months to the end of October was around $40 billion. And once again, the problem from Russia's point of view is that India were not prepared to pay in Russian rubles, but rather have been making payments in Indian rupees and Chinese yuan. So what this analysis shows us is that since the European Union introduced its outright ban on the purchase of seaborne crude oil, Russia has done deals with China and India equating to around $116 billion, which represents around 45% of all of Russia's exports. And the problem that Russia has is that it's now sitting with large quantities of Chinese yuan and Indian rupees and is now struggling to be able to make purchases from any other countries in the world apart from China and India. This chart shows the exchange rate between the Chinese yuan and the Russian ruble over the course of the last 12 months. And what this shows is that this time 12 months ago, one Chinese yuan was trading for 8.4 Russian rubles. However, today it's trading for around 12.4. And the fact that Russia is being paid in Chinese yuan for the export of oil and other commodities is causing it problems. So let's run through an example of a barrel of oil to really put this into perspective. The current price of a barrel of Russian oil is around $64, and the exchange rate against the US dollar is currently around 89 rubles for $1. So based on those figures, a barrel of Russian crude oil is currently priced at around 5,700 Russian rubles. So using the current exchange rate, Russia is currently being paid around 460 Chinese yuan for every barrel of oil it's selling to China. However, 12 months ago, that same barrel of oil that was priced at 5,700 rubles would have earned Russia 679 Chinese yuan at the exchange rate of 8.4 rubles to 1 yuan, which represents a fall in earnings for Russia of around 32% over the last 12 months for the same barrel of oil. And this really puts into perspective the problems that Russia is facing, because not only are they being paid in Chinese yuan, which can realistically only be used for trade with China, but they are also receiving less Chinese yuan per barrel of oil because the value of the ruble is diminishing. And this chart shows the exchange rate between the Indian rupee and the Russian ruble over the last 12 months. And what this shows is that 12 months ago, the Russian ruble was actually stronger than the Indian rupee. And at that time, one Russian ruble was trading for 0.74 Indian rupees. However, the Indian rupee actually became stronger than the Russian ruble in June 2023. And today, 1 rupee is trading for 1.07 Russian rubles. So that means that over the last 12 months, the Russian ruble has fallen in value against the Indian rupee by around 45%. And if we use the same example that we just discussed for China, of a Russian barrel of oil that's priced at 5,700 Russian rubles, today Russia will be receiving payment from India of around 5,300 Indian rupees. However, 12 months ago, for that same barrel of oil priced at the same level in Russian rubles, it would have received over 7,700 Indian rupees, which represents a fall in the level of the currency that Russia is receiving of around 45%. And in exactly the same way as we just discussed for China, this is causing two problems for Russia. Firstly, they're receiving payments in a currency that they can only use to trade with India. And secondly, they're receiving significantly less now than they were this time last year due to the devaluation of the Russian ruble. If we now go back to this chart, which shows the movement in the price of Russian crude oil over the last 12 months, it shows that since the middle of July 2023, the price of Russian oil has been trading above $60. And the reason that that's relevant is that in December 2022, the West introduced a price cap of $60 per barrel for all Russian oil sales. Now, the way that the price cap was designed to operate, it imposed an obligation on any company transporting Russian oil to buyers to make sure that it saw documentation proving that the deals had been struck at no more than $60 per barrel. Now, obviously, from a compliance point of view, the West had no control over any ships that were coming directly from Russia, that were owned by Russia, nor could they control the price of any of the pipeline oil that was being sold directly to China. But this chart shows the ownership of the ships that has been transporting Russian crude oil dating back to January 2022. The light blue section at the bottom represents ships that are owned and or insured by the EU and the G7. The dark blue section is Norway, and the grey section are other countries. And what this chart shows is that there's been a reduction in the percentage of ships that Russia is using that are owned and or insured by the EU and the G7. However, it's still using those ships for around 40% of all of its oil sales. So that means that around 40% of all of those deals should be compliant with the oil price cap of $60. But clearly from the prices that Russia has been achieving during 2022, this doesn't seem to be the situation. And the USA recently imposed the first round of sanctions on owners of tankers carrying Russian oil priced above the G7 cap of $60 per barrel, one in Turkey and one in the United Arab Emirates, in an effort to close the loopholes on the mechanism designed to punish Moscow for its war in Ukraine. US President Joe Biden's administration placed sanctions on Turkey-based Ice Pearl Navigation SA, owner of the Yasser Golden Bosphorus, which the Treasury said carried Russian ESPO crude priced above $80 a barrel after the cap took effect in December last year. The USA also imposed them on Lumber Marine SA, owner of the SCF Primary, which the Treasury said was carrying Novi Port Russian crude above $75 per barrel. Because of the actions we're announcing today, and the further actions we will take in the coming weeks and months, these costs will continue to rise and Russia's ability to sustain its barbaric war will continue to weaken, a senior Treasury official told reporters. The measures identify and block access to all property and interests owned by the companies in the USA. The Price Cap Coalition also issued recommendations for the maritime industry, including a requirement for appropriately capitalised protection and indemnity insurance, agreed protocols on the use of automatic identification systems, and enhanced checks on high-risk ship-to-ship cargo transfers. Both tankers which conducted port calls in Russia used US-based service providers while transporting the Russian origin oil, the Treasury said. The US service providers would not be at risk of sanctions if they had not provided false or misleading information by others in the shipping chain about the price of Russian oil. Turkey's Yasser Holdings said it had necessary documentation from major London insurers for it to carry Russian origin cargoes, and that it had been company policy for more than a year not to carry Russian crude. Yasser said the vessel is currently under time charter for 3 to 5 months with ExxonMobil. The US oil major said it did not trade Russian oil or oil products. These deliveries are certified products of Canadian origin, Exxon said about the chartering. A Price Coalition official said Exxon was not a target of the sanctions and the company had chartered the vessel after it carried Russian oil. The price cap has forced Russia and traders to invest in what the industry refers to as a ghost fleet of old tankers, vulnerable to leaks and oil spills. Those vessels are undertaking long voyages to deliver crude to refiners in China and India, which have become the largest buyers of Russian crude. Neither country has imposed sanctions on trade with Russia. The cap forces Russia to pay around $36 per barrel for those non-Western maritime services, expenses that go to tankers, not tanks, in the Ukraine war, a US Treasury official said. Treasury Secretary Janet Yellen said on Wednesday that the price cap had sharply reduced Russian revenues over the past 10 months and that it was critical to keep imposing severe and increasing costs on Russia. So what's the summary and conclusion today? Well, I wanted to post this video to talk about what's going on with regards to the actual cash that Russia is being paid for its increased trade with China and India. It's well documented that since the sanctions were imposed against Russia, it's managed to pivot and sell a huge volume of oil to China and India to make up for all of the lost business that it has with the West. And on paper, that looks great. It looks like Russia has done a good job of sidestepping the sanctions. However, as we've seen from the data in today's video, there comes a new problem for Russia. The fact that neither India nor China are prepared to pay in Russian rubles. They don't want to get involved in that currency at all. And rather than making payments in Russian rubles, they've stipulated to Russia that they will make their payments in Yuan and rupees. And I think that's interesting in itself because it shows where the balance of power lies. Historically, if you're a major seller of oil, you would think that you're in a very strong position. You can dictate terms to whoever you want. However, Russia has a much more narrow market today than it used to have before it invaded Ukraine, and the volumes that India and China can buy are critical to making sure that the Russian oil industry doesn't implode. If Russia wasn't selling to those two countries, there is a very real possibility that it would have to cut down its production significantly, and that could cause major problems and potentially could lead to some of those oil fields becoming redundant if Russia didn't keep drawing oil out of the ground. And of course, India and China are fully aware of this. They know that Russia is desperate to ship all of this oil to them. And as a result of that, they are dictating the terms to Russia. They're saying, we're not going to use Russian rubles, not interested in that. You can keep your Russian rubles for yourself. We will pay you in our currency. And as we've seen in today's video, there are two major problems that are now arising from Russia's perspective. The first is that from an exchange rate point of view, the Russian ruble has fallen significantly in value against the yuan and the Indian rupee. And that means that in relative terms, Russia is now being paid less in Indian rupees and Chinese yuan than it was this time last year. So the value of the currency that Russia is receiving has gone down. But what's worse than that from Russia's point of view is that the tradability of those currencies is far less than it was for the US dollar and the euro, which were the two currencies that Russia was predominantly being paid in before its invasion of Ukraine. So Russia is now building up a huge amount of Chinese yuan and Indian rupees. And realistically, the only countries in the world who want to deal in those countries are China and India. And from Russia's point of view, they have a huge trade surplus when dealing with both of those nations. Russia is buying in products from China, but nowhere near enough to cover the amount of oil, gas and coal that China is buying from Russia. So Russia is building up a huge surplus of yuan, and it's even worse in terms of rupees because Russia isn't buying a huge amount of product from India, but India is buying a lot of oil from Russia. So on paper, the net worth of Russia is going up significantly. It's building up large amounts of cash in these currencies. But the purchasing power that that's giving Russia is actually diminishing because nobody else in the world wants to take that currency. And so Russia has now found itself in a situation where it's making sales on paper. So in theory, the P&L all looks very good. But in terms of converting those sales into usable cash, Russia is in a far worse position today than it was before it decided to invade Ukraine. So the overall summary of today's video is that the devil's in the detail. Whilst it might look at face value that Russia is doing fine, it's shipping huge amounts of oil to India and China, the reality of what that means in real terms is that Russia is receiving payments in currencies that it can't use, and it needs more dollars and euros to be able to buy things that it needs to import. And that means that the economy of Russia is actually coming under increasing pressure. In addition to the fall in revenue that it's already reporting, the actual real usable amount of cash that it has is far less than it had previously, and that will cause further problems for Russia as this situation continues. So hopefully you've enjoyed today's video, you've found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end. Don't forget, if you'd like to win this, please check out the video at the end of today's video. But before we get onto that, here's something to put a smile on your face. I'm constantly being asked about the statues in the background of my video, and I've got some really exciting news for you. I've decided to give one of these away as a prize. This guy here, who's an electroplated resin statue of a balloon dog, and if you've been watching my channel for a while, you'll know that I once posted a video about a balloon dog called Squeaky. Now this is a really fantastic piece, really reflective, quite heavy, and would make a great addition to any home. And you can win this for just £1, which is the equivalent of around $1.30, so really affordable. So rather than buying me a coffee or sending me a YouTube super thanks, why don't you buy a ticket in the raffle that I've set up to win this? Now, to keep things above board, I've got an independent company to take the cash for me and do the draw. So everything will be entirely independent. I won't be picking the winner. It will be all at random. But I will post this to anybody in the world that wins it. There is a possibility that you might need to pay a little bit of import tax depending on where you live and what the import duties are. But this is your opportunity to win a genuine Joe Bloggs sculpture. So buy yourself a ticket and good luck in the draw.